First one is institutional grade real estate. These are things like apartment buildings, build to rent developments, things of that nature. Again, physical assets you can walk up and touch, And so when I talk about this, why would somebody invest in an apartment building? The most common question I get is, why wouldn't I just go buy a duplex and rent it out? The problem with that is you become a landlord. You got to deal with the troubles of real estate, tenants, toilets, termites, things of that nature. Uh, I literally just before this call got a phone call from someone at one of my properties, and they hit a gas line with a backhoe, and there was this giant fireball that happened. Luckily, nobody got hurt, but I have to deal with those problems because I'm the owner. If you want to invest in an apartment building, okay, now you invest with me in one of these. My team handles all of the work, okay, and does everything for you. And all you have to do is worry about three things at the end, right? At the end of the month, you got to read the investor update that gets sent out to you. You have to deposit your check, and at the end of the year, you have to send your K-1 or your tax document to your CPA. You don't get calls in the middle of the afternoon saying there was a giant bomb that just went off, right? Because somebody hit a gas line. I deal with all of that for you. A couple more bullet points of why real estate syndications are good. I just covered this, right? Sponsor versus passive investor. We do all of the work for you. We make the major key decisions. We handle all of the problems. You get to sit back and collect all the benefits. Then you also get on the right, it talks about, as a passive investor, you get cash flow well from holding these. This does honestly in this type of asset, it starts off fairly modest, usually in the beginning, but that can ramp up to be pretty significant over the long term. And then when we sell the property, that's when you get the big chunk of cash. So you get to participate on both sides, cash flow and equity.